Welcome to the Titans of Industry show. I have a blockbuster interview for everyone today. Harry Dent, Mr. Harry Dent is on the call. HarryDent.com. There's a free newsletter, obviously, everyone knows about and loves. And Zero Hour is the latest book. But, this guy, talk about bestsellers from the 80s to the 90s to the 2000s. So much research and economic predictions, etc. over the years. Lots of very bold calls, which is something that everyone likes to hear because the mainstream media, what are you going to hear? It's all the same, and it's useless. So I love Harry's take on stuff, very deep research, and let's jump right into this. First of all, thank you for being on the call, sir.
Sure, yeah, good to be back.
Hey Harry, let's start with what's going on with China and the U.S. China being 15% of the world's economy, GDP-wise, the U.S. 25%. Put together these two, 40%. If you add on Japan and Germany, you got half of the world's economy moved by four countries. And we see that China is the one that's growing at 6%. Japan and Germany, they're not even growing. The U.S. is growing to 2.5% to 3%, depending on which kind of stats you look at. Obviously, in the 21st century, China and the U.S. will be very dominant. What is the agenda for the U.S. and for China with the trade talks or with the trade agreement? Because the most important thing in my book is if there's a great trade deal between those two countries, then China doesn't need to hoard dollars anymore the way they've been hoarding, and that will be very detrimental for the price of for the value of the U.S. dollar relative to other currencies. But just in general, what should people expect from the trade? The trade debate. I don't want to call it a war. It's not really a war. It's just a negotiation, and it could be prolonged. But your overall take on this and how it will impact the price of money, which is gold, and the price of leading currencies like the dollar and the euro.
Well, first of all, you just mentioned the major powers, U.S., let's call it Germany and maybe Europe, and Japan and China. None of these have growing demographic trends. The U.S. moves more sideways over the coming decades. Japan's been down, will continue to go down further. Germany is going down demographically, and their spending power and workforce size as fast as Japan was in the early 90s. They're going to sink the euro rather than save it. And China is the first emerging country to see their workforce and spending power as a country actually peak. Now, they're still growing with urbanization, and that's a big deal, but they've overbuilt that. So this is the leading countries in the world are all going nowhere. If I had to bet on anybody a few years from now, it'd be India and Southeast Asia, because that's the emerging world. It's still urbanizing, still growing in demographics for decades ahead. But what it comes down to right now, it's still U.S. dominant versus China, the up-and-coming threatening leader. And China's a top-down country, not elected. And China is, again, an autocracy, strongman leadership. Their leader does not want to look weak here. No, well, neither does Trump, because Trump's a wannabe autocrat. He wishes he could just have absolute power, and he tries to wield it as much as he can. So you got two people duking it out here. The thing is, everybody's thinking, what should be obvious, hey, we export only a quarter to China what they export to us. They are going to be hurt more by these tariffs and this lack of a trade deal. And people say, well, China's going to make a deal every day. They're just going to hold out and play tough. No, I keep saying China's playing a long-term game. They got the Belt and Road Plan for decades. They've been urbanizing at extraordinary rates too fast, which I think is going to get them in really big trouble. Way too much debt, way too much empty capacity and everything from condos to industrial capacity. So, but the wars between us, the difference is we think short term. Our corporations want to make next quarter. Trump wants to get elected in 2020. The Chinese leadership, we're going to be number one and crush you. So they are willing to take more pain than we are short term. So I think Trump and everybody's underestimated them. And I kept saying to our subscribers for the last year, look, China is not going to give in so easy, and they're going to keep saying it's just like Kim Jong-un. He does the same thing. Oh, I'll be a good boy. I'll stop building missiles, and then just when you least expect it, he goes off again. He's just jerking you off, and so that's the advantage of autocrats. The disadvantage is they have no discipline, they have no accountability, they don't have to be reelected, and so they overdo everything. And China is the epicenter of the greatest bubble in history because of their top-down rapid urbanization. And to do that, they've been willing to just keep building stuff for nobody. I mean, literally nobody. Saying, well, we're going to continue to see more rural people migrate. Well, you know what's happened in the last year or two? The migrants coming from the rural areas are going back home because the real estate's so expensive because of their bubble. The smog is so bad, the traffic's so bad, and they're the lowest paid workers in this hell realm. So they're going back to the rice paddy. So they were enticing people by creating endless jobs, by building stuff for nobody. Now, that's not working because they're going home. China is going to fall harder than any of these countries. Germany is going to be the other big surprise. The U.S. is the best house in a bad neighborhood. The world is going down from my point of view because demographics are going down. Levels on crazy man running the U.S. from my point of view. I don't disagree with everything he's doing. He's just crazy. And that's not what you need for leadership.
And despite all of these very problematic fundamentals, we see the markets are having a blast in 2019.
Markets on crack, I call it, Lior. Markets on crack. What people crack? They just want to get high. And are they in reality? They think they can jump off the roof and fly. That's the way the markets have been. They just go up, 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 up until some really bad news hits. Then they go down temporarily, and then the least little good news, and they go running up again. This market is going to go down so hard. I'll tell you what I've learned from studying all the bubbles in the last century in the stock market. The first crash out of a bubble like this is down 30 to 50%, typically on average 42% in the first 2 to 3 months. This market's going to crash so hard when it finally does, nobody's going to see it coming, and people are going to panic and sell out, and it's going to be a disaster, and then it's going to keep going down for 2 to 3 years. That's how this works. So people who think, we can just keep staying with this bubble, if you do stay with the bubble, which I do recommend right now, because it looks more positive on the charts and stuff. It doesn't look like this bubble's burst yet from everything I see. But when it starts looking at it, better to get out a little early than late, because when it goes down, it'll be harder and faster than it went up. That's what bubbles do. They suck everybody in, then the Titanic sinks.
Well, and the correlation between all sectors in the stock market have become so great that it doesn't matter which one you choose. If you go defensive like utilities or healthcare, it's all going to become a very collective bear market. We saw it in December. We'll obviously see it again the next time. I do want to ask you, in light of this, in light of a bear market, and bear markets usually last between 18 months and 24 months.
This is the major bubble. This is a once in a generation, a once in 2 generations. This is going to last 2.5 to 3 years, most likely, just like 29 to 32.
Okay, so we have 3 bad years ahead of us once this bear market begins. Diversification is obviously going to be important. Where should people look to put their money in the meantime?
It's not going to be important. It wasn't in 2008-9. What went down? Gold, silver, commodities, real estate, large caps, small caps, value, growth, global, domestic. Everything went down except for high quality bonds and the U.S. dollar. The one thing that dumbass gold bugs say was going to crash the most, because we're printing money. No, everybody's printing more money than we are. We're the best house in a bad neighborhood. We have the best demographics of these European, Chinese, Japanese leader countries. We have the least money printing, and our debt is on average less. So we're just the best house in a bad neighborhood. So the U.S. dollar, as in 2008, that you want to be in U.S. dollar investments, and you want to be in high quality long-term government bonds, 10, 30-year treasury bonds, and AAA corporate bonds, especially multinationally diversified companies. But diversification isn't going to do you much good in this once in a lifetime. This is once in a lifetime. And in fact, on our biggest cycle of all of our cycles, a 90-year double technology cycle, this is a little more than once in a lifetime. So people aren't going to know what to expect here when it happens. And the size of this bubble and the magnitude even of the crypto bubble, which makes the internet bubble look like nothing in its percentage gains, when it has even less in real terms. I do think cryptocurrencies is the next big thing, or more like blockchain technologies, but it is getting overvalued even more than the internet did in '99 in its last little spurt on the technology bubble. So everything here is saying this is not an ordinary market top. It is a bubble. It's the third stock bubble. It's the second real estate bubble. It is global. Everybody's got a bubble in their stock markets almost. Almost everybody has bubbles in real estate now. Commodities have already burst up to 70%, showing how bad bubbles go down when they burst. And when everything else bursts, stocks are going to be down 70 to 90, and real estate's going to be down 40 to 50 in most countries. And nobody on Wall Street sees that coming because they're high in the bubble. They're creating the bubble along with the central banks. So of course they're not going to see it or admit to it. They're higher than a kite. They're making money hand over fist with money that's zero adjusted for inflation, short-term and long-term. Central banks just printing money, throwing it into the system to offset the Great Depression that did start in 2008, as we forecast 20 years ago. And that just means instead of having the worst of the Depression on the front end from 29 to 32 as last time, we're going to get the worst on the back end. Last time we had 29 to 32, 25% unemployment, 89% blue chip stock crash. And then we had a second mini depression on the back end from 38 to 40. This time it's the reverse, the small recession, what they call the Great Recession. 2008 to 9 came on the front end. We printed our way out of that. So we're going to get the big one on the back end. So we're going to get 29 to 32 between late 2019, early 2020 and 22. That's my best projection at this point. It could come a little later. Trump's certainly going to try to get reelected. He'll probably start sending people money in the mail, or at least free all-star wrestling, tickets or something.
Let's talk about that a little bit, because it's been floating around in the last few weeks that basically the monetary policies of the last decade, they created QE programs, and they created artificially low interest rates at some point, even negative interest rates in many countries. There are still $11 trillion worth of negative yielding bonds, but the credit did not go into the people that need credit the most, and that's the lower income or the middle class, the shrinking middle class. And therefore a lot of people, including, we're talking hedge fund managers, policymakers, etc., they're talking about the next phase. Yeah, they're talking about the next phase and how to stimulate, and they're saying, hey, we need more control of where the credit that central banks create go to. So they're saying, let's zero out interest rates in all of the currencies around the world. That way, central banks are not part of the equation of where credit goes. They'll print, we'll tax, and we will allocate the funds according to what society demands. And we'll do it in a way that as long as inflation stays tame, then we'll just keep on doing it. And that's called modern monetary theory. And I can't find a more ridiculous theory. I wish they would just close the door on that thing. But it's becoming more and more popular because it's so simplistic. Yeah, for the average person to get just a check in the mail. I mean, what could be more simplistic than that? And then the new thing.
Everybody's been waiting to go to heaven. This is heaven. You just get a check in the mail. The government just prints money to cover their costs. They don't have to tax or float bonds, and everything. Everybody's happy. This is the most utter BS in all of history, and this is exactly what comes out at the top of bubbles. At the top of the 1929 bubble, Irving Fisher, the top economist, and other leading people said, "Oh, we're in a new permanent plateau of prosperity." When people start talking like that, you should run. This is what happens. People get high. When you're in a bubble, stocks are going up 20 to 30% a year instead of 6, 7, 8, which is more than long-term average. your house instead of going up with inflation. And that's the only thing real estate correlates with long term. And inflation's been 0 to 2% recently. Oh, that's going up 10, 15% a year. You're getting a free lunch sitting on your ass on your couch watching Game of Thrones. Everybody's high on this, but nobody's more high than Wall Street and politicians who bailed themselves out of the Great Depression of 2008 to 2023, which we forecast 20 years ago just by demographics and debt trends and normal cycles. And they're just trying to print their way out of it and think, oh, we don't have to deleverage debt. We don't have to bite the bullet. We don't have to flush out bad banks and inefficient companies. We'll just sail through it. I mean, people are crazy. People call me crazy. I'm sorry. I'm the only sane person left on earth right now. People are crazy. Warren Buffett backs this BS. He's crazy, and he's going to go down with it. In fact, Warren hasn't had that higher returns for a long time. He made most of his returns a long time ago, 50s and 60s. So he's not as great a manager, and anybody that gets as big as he is. So don't listen to Warren Buffett. He's a nice guy. I like him, but don't listen to him.
You know, I want to ask you, Harry. You mentioned how simplistic this is, getting money in the mail. Obviously, the government will even incentivize you. They'll say, hey, this currency will destroy itself in 18 months or 12 months. If you don't spend it, they'll force you to spend it. It's all of these ideas are coming out in the last few months. And I want to ask you, you know, in general, why is there such a gap in the understanding of basic finance with the average person? Is this part of a deliberate educational dumb down in the Western countries? Because if you ask the average person about that, he doesn't even know what the Federal Reserve is. And
they don't know how much money's been printed. Yeah, I'll give you a number: $16.5 trillion from all central banks combined since 2009. $16.5 trillion. That's 20% of the global economy. That's 2-3% a year growth just off of free money. So if we've been growing at 2% in real terms in the U.S., we'd have been growing -1% or more. Without it, we would have been declining. We'd have seen deflation instead of low inflation. They have perverted the entire system. Lior, the number one thing that no economist I know other than Lacey Hunt and a few others is that our economy thrives on the play of opposites, thrives on cycles. We get the greatest innovations in down cycles and in inflation and deflation. We have the greatest booms in the adoption of those new innovations in times of stable growth and stable inflation or lower inflation. It's just part of the dynamics. If you take the dynamics out, if you say, oh no, we're central banks and we want to turn the economy into a machine and grow at 3% a year with 1 to 2% inflation with no recessions, then you've killed the golden goose. Free market capitalism and democracy are opposites. I mean, Republicans think they're the same thing. They don't understand it either. They're opposites. Democracy is socialism. It is giving everybody one vote no matter what you contribute, or whether you're on heroin. That's socialism. Capitalism rewards whoever creates the most value. That's capitalism. They balance each other. If it was all capitalism, the top 1% would control 80% of the economy. We'd all be serfs. If you give it all democracy, everybody be sitting at home watching TV, never working, receiving a guaranteed check from the government, spending it, and then you think, well, who's going to produce the goods for these people? Because everybody else is sitting at home because they're getting free checks and they have no incentive. That's the ultimate socialism. Look at Venezuela. Ultimate. They just kept giving everybody goodies without productivity, living off of oil and not having any real productivity or real industries other than that. And now they've got hyperinflation. Well, we got the other problem. We're fighting deflation. And the problem is we need deflation. We need to deleverage a lot of unproductive debt, a lot of unproductive banks, including Deutsche Bank in Germany, and a lot of unproductive companies. that are hanging on only because the government bailed them out and printed all this money and did. I mean, Japan never deleveraged their debt or their bad banks. And guess what Japan's been in since the early 90s? A coma economy. Pretty much zero growth, zero inflation, just coma economy on medication waiting to die. And Japan is dying before our eyes, and it will continue to die because it's doing nothing from deleveraging debt to encouraging more births or immigration to offset their endless spiral downward. They're just printing more money, hoping somehow magically that will work. It doesn't work long term. Never has, never will.
Harry, do you think that at some point some of these big governments will do a debt jubilee?
Will do what?
A debt jubilee, and they will write off an incredible amount of debt. Just write it off.
That's what I'm praying for. That's what happened in the 30s. Government debt always goes up in a downturn because their social costs go up and their tax revenues go down. I mean, governments are not going to be able to write down debt at first. What happens is the private sector, which typically has 2, 3, 4 times as much debt as government anyway, that's what deleverages first. That makes the economy unhealthy at first, goes down, but all that debt getting rid of takes a big burden off of businesses and consumers. Debts get forgiven. They get written off, restructured. Chapter 11, it's called in business, or Chapter 7, but it's mostly Chapter 11 that works the best, because Chapter 11 means you reorganize the debts of a person or a business, but you don't kill them, which Chapter 7 does, and just wipe them out and just do a fire sale and take over. So that's what is needed. That's what everybody's avoiding. Nobody wanted a major bank to go down and then more banks to go down. That's what happened in the early 30s. Banks went down. Businesses went down. The stock market went down 89%. Real estate went down 30%. That set the stage. Lower cost real estate, lower cost stocks, more efficient businesses, debt relief makes the way to have spring again out of winter. And that's what gives a turnaround. Everybody's doing everything else, and everybody's following Japan into a coma economy. And you know what? They're not going to do any different till they get their ass kicked so hard they can't get off the floor, like an addict that finally collapses and goes into rehab. That's where we're at. Everybody's like, yeah, new plan. Well, how can we print money another way? Oh, Trump comes in. Oh, how can we just give profits back to business? Well, they are suggesting, well, just send checks to people in the mail. Well, I would have rather, if you're going to print money, I'd rather send money to people in the mail rather than put it in the banking system and create speculation and asset bubbles like we have. But it's still, that doesn't work either. That doesn't solve the problem. It just makes people more complacent. Okay, that's okay. We don't have to change jobs or do anything different or pay down our debts or do anything. We'll just live off of free money and glide along. That's not the solution. Getting your ass kicked and changing, that's the solution. That's why the greatest innovations come in recessions, in times of higher inflation or deflation. Those innovations don't come as much in times of boom and good times. That's when all these innovations filter into the economy in good times, and that's a part of the cycle. That's supposed to happen too. But you can't have a boom without a bust. You can't have inflation without deflation. You can't borrow, especially excessively, without having to restructure that debt when it fails, or write it off when it fails, or restructure. And if you think otherwise, then you're a freaking idiot, and you don't have your eyes open, and you think you can get something for nothing. If there's only one thing I've ever learned in life, you don't get something for nothing, and that's the plan of everybody from consumers to central banks to Ray freaking Dalio, hedge fund manager.
Harry, let me ask you then. So what you're seeing is interest rates staying low. You're going to see a getting lower. You're going to see a rally in the markets, and then everything, no matter what it is, you're seeing a deflation in prices and seeing a really bad depression. No matter where you put your value and your purchasing power,
except the best currencies, like I'll say Australia. Maybe even India, an emerging world. Maybe Australia's got very low government debt. Norway, Sweden, good demographics and low debt. Only the best currencies and only the highest quality bonds. Money's got to flow somewhere. That's where it goes. Short-term bonds are the safest, but the biggest gains in the Great Depression, in the 1930s, where everything went down, AAA corporate bonds in the US and 10 and 30 long-term treasury bonds pretty much doubled in value in a decade where everything went down from 30 to 50 to 70 to 80% and took a long time to come back. So that's the trick. Cash is king. If you're going to have to deleverage financial bubbles and deleverage debt, the money's going to vanish. When the stock market goes down 90%, your brokerage account went down that much if you have stocks. That money vanished and it's not coming back. When banks have to write down a loan 50%, that money vanished from the economy and vanished from the banks, and it doesn't come back. So that causes deflation, but deflation makes everything cheaper, everything more efficient, everything meaner and leaner, and that creates the basis. What does winter do? Freeze everything so spring can bloom again. That's what a depression is. That's what deleveraging is. It's a winter season for the economy.
Harry,
nobody wants.
Harry, where can people check out more of your work?
HarryDent.com. You can get on our free daily newsletter, get to know us better. We have a whole series of newsletters and services, but get to know us. I mean, what I'm saying is so out of the box, and most people say, why should I listen to this person? Well, everybody else is saying elsewise. You shouldn't listen to them. When everybody's hurting in one direction, that's when you're in trouble. Also, my book, 0 Hour. That I tell you, 2 books I recommend: 0 Hour and Factfulness. 0 Hour came over a little year ago, and Factfulness by Hans Rosling, who deceased, but his kids got the book out. We both look at the world.
I just finished that one.
If you look at those 2 books, if you gave those two, if let's say you've got kids in college, you gave those 2 books to your kids in college, they wouldn't need to take an economics curriculum. You'd be smarter than your professors. Hans Rosling's book, you saw at the beginning, 20-question test that the greatest world leaders in finance and politics and all of this stuff flunked. People don't have any idea what's happening in the world and how much progress we've made, but also maybe how much we're in debt and how much leverage has been put in. This stuff is crystal clear. A 10-year-old could see it. Nobody's telling anybody because nobody wants anybody to see it. Everybody's high on the bubble. The establishment is only surviving on the bubble. Otherwise, they'd have had their ass kicked and deleveraged half out of existence by now. And so they're not going to tell you about it, and they're going to keep the bubble going as long as they can. But I'm telling you, when it bursts, and there are zero exceptions in history, any bubbles of this magnitude only crash, and when they do, it's hard, fast, and deep. There is no soft landing to a bubble like this.
Harry, thank you very much for taking the time. Great call as always. We'll definitely have you on in a few months to circle back and see what's going on. And
yeah, late this year would be a good time, Lior.
Perfect. Okay, Harry. Thank you very much.
Okay. Thank you.
And we're off the air.